Today we're going to be going through some high performance locations in Queensland, more specifically in and around kind of Gold Coast, Brisbane, Sunshine Coast area. For full disclosure, today we're going to be going through the Ripe House data tool and just using the data to identify potentially some growth suburbs regarding our R-score and what are some high indicators through there. For full disclosure, these areas have not been, verified by our team at this point. We're just looking purely at the data. We haven't gone in there and taken away risk factors, things like flood, cyclone, tsunami, bushfire impact zones, which we do not purchase at an advisory level, new development, supply risk coming through, economic diversity, etc. So we are just purely looking at data and AI at this point. If you are unfamiliar with the Ripe House algorithm, so the Ripe House algorithm has been in place now for over 13 years, and over that period of time it has constantly been updated and evolved over time, and it's consistently improved. There's a myriad of data factors that we look at which all have different impacts of weighting scores of what they bear on what we call the R-score. And the R-score is essentially a score out of 100, which we apply to every single suburb across the country to create our performance bell curve. You know, properties that are sitting at the higher end of the R-score, kind of 80% plus, are anticipated to perform in the top 20% of growth. This is before risk factors are applied. And we go through there as a business on a monthly basis and essentially eliminate more than 80% of suburbs that have firstly been approved from the R-score, then we come in and use our manual due diligence on those areas. And like I mentioned, over 80% are removed. But today we're going through that, and the first suburb we're going to be looking at is Eagleby. And I guess why we like the look of Eagleby from a data perspective, and just pulling that open now, is firstly, if you're not familiar with Eagleby, it's located in the LGA of Logan. So kind of about 25-30 minutes away from Brisbane CBD, about 45 minutes away from Gold Coast. And we're looking at a median house price there of kind of circa $560,000. Now, for full disclosure, that is the median house price. Now, when you're getting into pockets, particularly like this pocket, there's quite a lot of public housing in this area, not extreme, about 6.3%, which would probably be the lower side for Logan. You can get quite significant price fluctuations. Typically, where there's a lot of rent heavy, a lot of public housing, you will get much lower than that median house price. And as you get to the better part of the suburbs, which is ideally where you want to be targeting, you'll get a higher price than that. But looking at a median house price of about $560,000, yield for the area is sitting at about 4.8%. The reason this one's of interest to us, so the proximity to utilities and amenities, which is a huge driver of anticipated growth for the area, in comparison to other like-for-like suburbs, it's sitting at the top 91% across the country, so very, very high. The other thing we like about it is that the state as a whole has moved around about 7.1% of capital growth for the quarter, but the Eagleby suburbs moved about 5.4%. So it's actually lagging behind the rest of the state, and you will find those areas that are lagging behind play catch up as time goes on. So that's the first one up off the bat for us. Second one we're going to be looking at is Burnside, and let me just pull that one open on the screen right now. So we've got Burnside over here, and the Burnside's located in the Sunshine Coast. So again, with this one, median house price for Burnside sitting at about $750,000, around that 4.5% yield. And for Burnside, it's significantly behind. So the R-score for this area is actually 100%, if I'm reading that correct. It is 100%. So it's sitting in the top 1% of scores on the algorithm. And the big reason for that one is Burnside has actually kind of gone through a cooling back period. It's actually gone backwards over the last quarter, about 2.5%. And again, without going into finer due diligence, we haven't really seen if there's a huge volume of sales happening in that area. There could have been the months prior, a really, really overcapitalized property, which has skewed the data a little bit. But as it sits right now, looking at the data, it's actually gone backwards about 2.5%, whilst the rest of the area has gone forward 7.1%. So there is a discrepancy of minus 9.6. There's quite a large lag gap there. So that one's sitting quite high, and that's why it's sitting at the 100% score. And thirdly, we're going a little bit further out from Brisbane again. So we're going into Brassel, which is in Ipswich. Let me just pull that open now on the screen. So we've got Brassel there. and I'll bring it up on my computer here so you don't have to listen to my back. Brassel kind of median house price is sitting at that $500,000 plus mark. The yield is a little bit lower here, so 4.3%. And again, there's a big discrepancy in the sold data versus the state average here. So the state average looking at 7.1%, given that we're still in Queensland. It has moved at 2.4% for the quarter. So there's about a 4.8% discrepancy and not much public housing. So 3.7% sitting at an R score of 8.4%. Some of the weaker factors that we see here, if I was to have a bit of a look through that there, what don't we like? Days of supply is a little bit high in comparison to some other areas. Proximity to utilities and amenities is still excellent, sitting at 90%, so that's a big tick. Sitting in a low socio area, so it's got a 2 out of 10 in the socio advanced score. But in general, still sitting high, sitting at 84%, so quite high in the top 16% of growth suburbs, purely according to data and AI. If you have any comments, please leave them below. If you haven't already, make sure you're smashing that like button and click subscribe, and we will speak to you the next one. Bye for now.